I'm Matt Bouchard with REIT.com here in San Diego for REIT World 2012. Joining me in this episode of CEO Spotlight is John Kite, President and CEO of Kite Realty Group. John, thanks for joining us.
Thank you for having me.
And in reading through the analyst reports following your third quarter results, they seem particularly high on your development and redevelopment activities. Can you give us some of the highlights there?
Yeah, we're very busy right now in development and redevelopment, and I think it's one of the cornerstones of the company. We have about $200 million approximately of in-process development going on right now, split up between 2 large new developments and 3 redevelopments. The large new developments, one's in Delray Beach, Florida. It's kind of a Main Street shopping center anchored by Publix and a large IMAX theater, small shop guys like Joseph Bank, White House Black Market, that type of center. And then we have another large center under development in Raleigh, North Carolina, which is more of a traditional power center with Target, Dick's, guys like that. So it's good. It's active, a lot of momentum in the leasing side. There's very little development going on in the country. So the fact that a company our size has about $200 million in process is a pretty good thing for us.
And your company's also been active both in acquiring and selling assets. What kind of criteria do you use when determining what's on one side of that spectrum?
Well, we try to go through the portfolio pretty consistently and think about where the growth lies and where it doesn't. And I think I would say our biggest characteristic of things we'd like to sell are centers or net lease type properties that don't have much growth profile. And then maybe also geography is a factor there where we'd like to tighten our geography a little bit. So we've been pretty successful in selling at good numbers and redeploying the capital into new acquisition opportunities. The acquisitions have been in target markets that we like at attractive pricing. I mean, to us, it's all about getting the right price. So so far have been able to buy shopping centers at well below replacement cost, which is one of the most important metrics to us. Because right now things are getting priced up pretty high, so we have to be careful around that.
And one trend that we've seen in the retail space is kind of a reemergence of small shop retailers. Yeah. Are you seeing a boost in your portfolio, and what kind of impact are these tenants having? Yeah,
we're definitely seeing more activity. I think that the confidence level in the general economy is important to that. But still, it's probably 75% more national-oriented small shop users and probably 25% mom and pop users. And it's important because, probably when you look at it from the perspective of tenants that are 5,000 square feet or less, that's about 30% of our revenue. So to the extent we're able to lease these up and also, at much higher rents than we would get in the boxes, it's very important, and it's going to drive NOI for us probably for the next couple of years.
John, thank you so much.
Thank you, Matt. Appreciate it.
For more on this and other REIT news and analysis, be sure to visit REIT.com.